So MicroStrategy had a very strong day, finishing the day up more than 11%. You're up 46% in the past week as well. I think this is your first time joining us since we saw these Bitcoin spot ETFs began trading. Initially, we saw shares of MicroStrategy sell off, but now, since January 11th, MicroStrategy is outperforming all of those ETFs. Walk me through your outlook for Bitcoin, and then we'll jump into earnings.
I think a lot of this is just indicative of the popularity of Bitcoin as an asset class. It's now the world's most popular investment asset. It's novel, it's digital, it's global, it's unique, and it's uncorrelated to traditional risk assets because it doesn't come with exposure to any given country, currency, company, quarterly result, product cycle, competitor, not to weather, not to war, not to an employee base or supply chain.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day.
And so that makes it a natural addition to the portfolio of a responsible investor. There's 10 years of pent-up demand. People have been waiting for these ETFs, and finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers who are the miners.
MicroStrategy has recently demonstrated exceptional performance and strategic prowess, particularly evident in its market outperformance following January 11th. Amidst a landscape of diverse investment options, MicroStrategy stands out prominently, surpassing all exchange-traded funds, ETFs, in terms of performance during this period. The surge in capital inflow into the asset class can be attributed to the growing accessibility of Bitcoin to mainstream investors, as cryptocurrency gains wider acceptance and recognition as a legitimate investment vehicle. More investors are seeking exposure to this digital asset. MicroStrategy has been astute in capitalizing on this trend, strategically allocating resources towards acquiring and holding significant amounts of Bitcoin. The company's robust financial results underscore its prudent approach and forward-thinking strategy. With increased holdings in Bitcoins, MicroStrategy has not only fortified its position in the cryptocurrency market, but has also diversified its portfolio in a manner that aligns with emerging investment trends. This move reflects a calculated risk management strategy, leveraging the potential upside of Bitcoin while mitigating associated risks through diversification.
You rebranded the company, or announced the rebranding of the company as a Bitcoin development company. What does that mean?
Well, it's a natural decision for us given the success of our Bitcoin strategy and our unique status as the world's largest public company holder of Bitcoin. MicroStrategy is an operating company that can actively manage its capital structure and its business operations with more flexibility than an investment trust, which is what these spot ETFs are. So we're going to develop software, we're going to generate cash flow, we're going to leverage the capital markets, all in order to accumulate more Bitcoin for our shareholders, and also to promote the growth of the Bitcoin network. Given the fact that the majority of enterprise value is now based upon those Bitcoin-related activities, it makes sense for us to call ourselves a Bitcoin development company in the same way as you see a real estate development company or a petroleum development company.
The flywheel that is the software business, the business intelligence business, you're shifting to the cloud, you're rolling out generative AI offerings. That subscription services revenue was up last quarter, but overall revenue was down. Just walk me through that business and how that rolls out this year and how that feeds back into the Bitcoin, if it does explicitly.
Well, we're going through a transition from on-premises to cloud, and AI is a really big driver of that transition. So there's a lot of enthusiasm for our new AI offering, and we built it into the cloud offering, just as you can see people excited about Microsoft's Copilot AI offering and driving their revenues. We think that our AI offering is also going to drive an acceleration of migration from on-premise to the cloud, and over time it'll allow us to continue to grow the business.
In embarking on the transition to a Bitcoin development company, several key strategic points must be considered to ensure a smooth and effective shift in operations. This evolution entails more than just a change in focus. It necessitates a fundamental restructuring of business processes and objectives to thrive in the dynamic landscape of cryptocurrency. Firstly, the transition involves steering the company towards becoming software-driven, marking a pivotal shift in its operational ethos. Embracing a software-driven approach enables agility and adaptability, crucial attributes in navigating the ever-evolving realm of Bitcoin development. By prioritizing software solutions, the company can streamline its operations, enhance efficiency, and stay at the forefront of technological advancements within the industry. Furthermore, flexibility in managing the capital structure emerges as a cornerstone of this transition. As traditional financial paradigms give way to the disruptive force of cryptocurrencies, it becomes imperative to adopt a fluid approach to capital management. This entails exploring innovative funding mechanisms and capital-raising strategies that resonate with the ethos of the digital economy. By maintaining flexibility in capital structure, the company can seize opportunities for growth and innovation while mitigating financial risks inherent in the cryptocurrency landscape. A paramount objective of the transition is to focus on generating cash flow, while strategically leveraging capital markets to accumulate more Bitcoins. Cash flow serves as the lifeblood of any business, enabling sustained operations and fueling growth initiatives. By adopting a proactive approach to cash flow generation, the company can fortify its financial position and capitalize on opportunities for investment and expansion within the Bitcoin ecosystem. Concurrently, leveraging capital markets allows the company to access additional resources for acquiring and accumulating Bitcoins, thereby bolstering its position as a prominent player in the cryptocurrency space. Crucially, aligning business operations with the growth of the Bitcoin network emerges as a linchpin of the transition, with a keen focus on maximizing shareholder benefit. As the Bitcoin network continues to proliferate and evolve, the company must remain attuned to emerging trends and developments, positioning itself as an integral contributor to the network's expansion. By aligning its strategic initiatives with the overarching trajectory of the Bitcoin network, the company can unlock synergies, drive innovation, and create sustainable value for its shareholders.
You talked about leveraging capital markets or continuing to. What does that look like in 2024, especially when there are some speculative investors out there that believe you might embark on another stock split?
Well, we're fortunate to be able to manage our capital structure actively and in a creative way. So sometimes we look to equity markets when that's the best way to acquire Bitcoin. But we've also done converts, and we continue to look at the convert market. We can refinance debt. We've refinanced our debt in the past and retired debt before. So we may issue debt, we may retire or refinance debt. We also are looking at potential preferred equity issuances or anything else that might be accretive to our shareholders. We try to be open-minded, prudent, thoughtful, and opportunistic as these opportunities present themselves.
Capital structure management and financial strategies are pivotal aspects of ensuring a company's stability and growth trajectory. In the year 2024, as part of its strategic maneuvers, the company is contemplating another stock split. This move aims to captivate speculative investors, thereby potentially boosting liquidity and market interest in the company's shares. Moreover, the company is diligently engaged in actively managing its capital structure. This entails a spectrum of actions, including the issuance of debt, refinancing existing debt obligations, and exploring avenues for preferred equity issuances. Such strategic maneuvers enable the company to optimize its financial leverage, balance risk, and seize opportunities for growth and expansion. By judiciously navigating its capital structure, the company not only enhances its financial flexibility, but also fortifies its position to capitalize on emerging market trends and investment opportunities. These initiatives underscore the company's commitment to sound financial management practices and its proactive stance in adapting to dynamic market conditions.